Bitcoin's recent price movements have sparked plenty of complaints. But Arthur Hayes, co-founder of BitMEX, argues that these criticisms completely miss the bigger picture. He believes the current crypto bull run is far from over, driven by ongoing global monetary policies that are only just beginning to unfold. But here's where it gets controversial. Hayes insists that governments will continue printing money aggressively, fueling the crypto market well into 2026, and investors need to adopt a much longer-term perspective to truly benefit. In a recent interview with Kyle Chassé, a seasoned Bitcoin and Web3 entrepreneur, Hayes laid out his case in detail. He emphasized that worldwide governments are nowhere near done with expansive monetary policies. Specifically, he pointed to US politics, suggesting that President Donald Trump's potential second term could unleash significant new spending programs starting around mid-2026. This, Hayes argues, could dramatically increase liquidity flowing into both equities and cryptocurrencies. While he admits that if money printing expectations become too extreme, he might consider taking some profits, for now, he believes most investors are underestimating just how much capital could flood the markets. Hayes also connected his outlook to larger geopolitical changes, highlighting what he sees as the decline of a unipolar global order dominated by the US. He explained that during such unstable times, policymakers often resort to fiscal stimulus and central bank easing to maintain social and market stability. This is a crucial point many overlook. Political and economic uncertainty often leads to more aggressive monetary intervention, which in turn supports asset prices, including Bitcoin. Adding another layer to his argument, Hayes mentioned potential troubles in Europe, even suggesting that a French default could shake the Eurozone and prompt further global money printing. While he acknowledged that these policies carry risks and could eventually end badly, he firmly believes the peak of this cycle, the so-called blow-off top, is still ahead. When it comes to Bitcoin itself, Hayes pushed back against the narrative that the cryptocurrency's momentum has stalled after hitting an all-time high of $124,000 in mid-August. He compared Bitcoin's performance to other asset classes, noting that although US stocks have risen in dollar terms, they haven't fully recovered relative to gold since the 2008 financial crisis. Real estate also lags behind gold, and only a few major US tech companies have consistently outperformed. Viewed through the lens of currency debasement, Hayes argues Bitcoin's dominance becomes even more apparent. Traditional benchmarks look weak in comparison. For investors frustrated by Bitcoin not hitting new highs every week, Hayes offers a dose of reality. Such expectations are misplaced. He explains that both traditional and crypto investors share a fundamental belief that governments and central banks will print money whenever economic growth slows. The difference lies in how they act on this belief. Traditional finance often leverages bonds, while crypto investors hold Bitcoin, which Hayes calls the faster horse in this race. His key takeaway? Patience is crucial. The true advantage of holding Bitcoin comes from years of compounded outperformance, not short-term speculation. Coupled with what he sees as an inevitable wave of money creation continuing through the decade, Hayes predicts this crypto cycle could extend well into 2026, far from reaching its end. But here's the part most people miss. This isn't just about Bitcoin's price. It's about understanding the broader economic forces at play and positioning yourself accordingly. Do you agree with Hayes that the money printing will continue to fuel crypto for years? Or do you think the risks of inflation and policy missteps could derail this outlook? Share your thoughts below. This debate is just getting started. AI disclaimer. Portions of this article were created with the help of AI tools and have been carefully reviewed by our editorial team to ensure accuracy and compliance with our standards. https://www.coindesk.com/ethics. For more details, see CoinDesk's full AI policy. https CoinDesk News 2023 414 How CoinDesk Will Use Generative AI Tools.